All right, let's get right into it. As a fund manager, my job is to cut through all the noise and find the actual signal. And let me tell you, right now, the market is just a massive web of contradictions. We're seeing record highs clashing with some major geopolitical risks, and it's sending some of the most confusing signals I've seen in a very long time. So today, we're going to break down what's really going on.
At first glance, you'd think it's time to pop the champagne. The market's hitting one new peak after another, but when I look at my dashboard, I'm seeing bright red warning lights flashing right next to all that green. The story the headlines are shouting and the story the data is whispering, well, they're two very different things.
And this is exactly what I'm talking about. On one side, you've got headlines screaming about record highs and progress on peace deals, but on the other, the hard data is pointing to an ongoing geopolitical crisis and some really deep structural risks. So today, we're going to put on our detective hats and figure out the real story behind these conflicting signals.
Okay, first things first. Let's look at the surface, right? The story that has everyone feeling optimistic. This is that easy narrative to buy into, the one that gives you that serious FOMO if you're not all in. And it's pretty easy to see why people are celebrating. I mean, the major indices, the S&P, the NASDAQ, the Dow, they're all pushing further and further into record territory. On the surface, this looks like a picture-perfect bull run. Now, here's where it gets really interesting. It's not just the direction, it's the sheer speed of this move that's turning heads. The S&P 500 has surged over 10% in just 11 trading days. Let me put that into perspective for you. A rally this fast, this powerful, has only happened 15 times in the entire 21st century. So yeah, we are witnessing a historically rare event. So what's the spark? What's the big headline everyone's pointing to? It's this: a 10-day ceasefire announced by Trump between Israel and Lebanon. This is the geopolitical news that the media has grabbed onto, and it's what's fueling all this powerful surface-level optimism. But look, any professional investor knows that headlines are where you start your analysis, not where you end it. That's how you avoid getting swept up in the hype. So let's dig into the data and see what's really going on beneath this shiny surface.
To really get what's happening, you need to think in two systems. The market's gut reaction, ceasefire, buy everything. That's what we call system one thinking. It's fast, it's emotional. But our job is to engage system two. That's the slow, analytical, data-driven approach.
So let's do that right now. Let's switch on system 2 and pull back the curtain. What are the numbers, the facts on the ground telling us? Because I promise you, it's a very, very different story from the headlines.
And this quote from LPL Financial, it points to the first huge crack in this whole bull story. See, this rally isn't being fueled by a flood of new, confident money coming into the market. Nope, it's being driven by short covering. That's when traders who are betting against the market are forced to buy back their positions. And the proof is in the pudding. Trading volume has been below average for 5 straight days. This is a rally built on fear, not conviction.
This brings us right to the heart of the contradiction. The market is trying to believe two completely opposite things at the same time. On one hand, you've got the peace signal, low volatility, record stock prices. But on the other hand, you've got the risk signal. Crude oil is stubbornly high at over $93 a barrel, and long-term bond yields are signaling serious concern. The market is pricing in peace, while it's also pricing in a crisis. It makes no sense.
And here it is. This is probably the single most important piece of evidence that our System 2 thinking uncovers. While the headlines are busy celebrating a temporary pause, the physical reality on the ground hasn't changed one bit. The Strait of Hormuz, the world's most critical oil choke point, is still effectively closed because of the ongoing U.S. Navy blockade.
So, the bottom line, perfectly summarized by the text here, is that a ceasefire does not equal normalization. A headline about a temporary truce is not the same thing as a return to stable, normal energy flows. The structural risk of a massive supply shock is still very much on the table, and that is exactly why oil prices are staying so stubbornly high.
So, when we start connecting these dots, when we push aside those emotional System 1 headlines and actually focus on the System 2 data, the real picture of this market finally starts to come into focus. This is not a strong, fundamentally driven bull market. It's a fragile, headline-driven rally that's built on a really shaky foundation. You have a historically fast run-up on dangerously low volume. You have a peace celebration happening while oil is still at crisis levels. And you've got record stock prices clashing with high long-term bond yields. This is a market that's at war with itself. And because this rally is so fragile, the smart money out there knows it's not going to last. The focus is already shifting.
As all the short-term noise from this geopolitical story starts to fade, serious investors are looking for the next big thing, the durable, long-term theme that's going to drive real returns. And right now, that next big theme is enterprise AI. The whole market conversation is pivoting away from short-term geopolitics and toward long-term corporate spending, capital expenditure on artificial intelligence. This is where the real multi-year growth story is being written as we speak. We are entering this crucial show me the money phase for AI. It's not enough anymore to just talk about the potential. Now, massive companies like Walmart have to actually prove that their huge investments in AI are generating a real return. Their results are going to be a bellwether for the entire industry. They'll tell us if the trillions being spent by Microsoft, Amazon, and Google are even justified. We're keeping a close eye on what we call a canary group, smaller, pure-play AI stocks that act like an early warning signal for how this is all going to unfold. So how do we take all this analysis and turn it into a clear strategy? How do we apply this system 2 thinking to our own playbook? Here's exactly how to navigate this contradictory market.
Okay, step 1. Maintain your core positions but do not chase this rally. The low volume just makes it way too risky. Step 2, and this is critical, hedge by the event, not the price. Don't sell your energy hedge just because a headline sounds good. You wait for the real-world event, physical confirmation that the Strait of Hormuz is open again. Third, start preparing for the next theme. That means doing your research on the AI ROI story. And finally, you have to actively ignore the System 1 noise. Tune out the headlines. Focus on the data.
Ultimately, that's the question every single one of us needs to ask ourselves today. In a market this contradictory, your success is going to be determined by one thing. Will you fall for the emotional, headline-driven reaction, or will you engage in disciplined, data-driven analysis? Thanks for joining me for this explainer.